Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. With that, let's welcome Dimitri Pargamonic to the stage, who's going to be talking about spotting the highest volume single leg trades. How you doing, D?
Good morning, Will. How are you?
Good. Let me add the screen to the stage.
Good
There you
morning,
are.
everyone. And yeah, the idea today is if we're looking at a stock with high volume. Actually, let's do this. I'm going to go to the options volume report, and when we look at a stock with high volume, you could see Tesla. This is the total volume on the day. Actually, this is in notional dollars. Let me just put it in contracts here. You see this aggregated volume, 1.9 million, 10 million, 5 million. And when we aggregate option volume, this consists of many different contracts, right? So it could be contracts in different expirations. It could be contracts on different months. It could be contracts on calls and puts. This is a total volume aggregated. And once when we have that as kind of a starting point, we could look if it's unusual or not unusual, because for some stocks on a daily basis there is a lot of volume. Other stocks may have less volume, like here you have SPY with 10 million contracts, Google here with 612,000 contracts. But on a relative basis, of course, that each of these can trade different volume per day. So then we kind of compare it to average daily volume. So you could see here, this gives us a relative volume. But these aggregated numbers, don't tell us really anything about the kind of like the details where we have to go in and drill, because unlike a stock, when Google has a stock, the stock itself, it's basically one security, right? It's Google stock. But we would need to see the breakdown of the options, because it's not one option contract. We'd have to see, well, what in there, stands out. Like out of the 612,000 contracts, let's say in Google, right? Let's say we're looking at Google. Out of 612,000 contracts, are there any particular trades kind of that stand out from the rest, right? Let's see the top ones based on that. That would require us to go in there and actually look through the different trades and spot them, figure it out. Is there a large contract, large trade that in a particular contract, 2,000, 3,000 contracts. So to help us with that, we got to parse it out. And here we see the breakdown, 78%, let's say in Google yesterday, 78% of the traded volume were in single leg trades. 22% were in multi-leg trades. So that itself also is important, because even within an option contract, right? Like let's say you pick an expiration, you have an option contract, but even that option contract itself could consist of different trade types. Sometimes you have just regular buyer call of that option, or it could be a option, part of an option strategy where that option is involved in a multi-leg trade, like a call spread or a put spread. And all that makes a difference between, changes the trade itself. So for today, we're going to look at just single leg trades, right? If we go and we look at the single leg trades in Google, we click on that, and it'll bring us to this dashboard for single leg trades. Okay, so I'm on Google today, single leg option trades. And now we have all these analytics that took out any multi-leg trades, and we have all these different single analytics on single leg trades. And here we could look at two ways. We could look at the aggregated single leg trade volumes. This is the top 5 most active, right? So now we have, November 25 320 call with 20,671 contracts for a VWAP price of $3.61. And then we go down the line. And this here represents aggregated trades, right? So it could have been a trade, from 9:30, and then at 9:35 there's another trade, 9:40 there's another trade, 11 o'clock there's a trade, 12 o'clock. So it aggregates all those trades, right? So even with that, when we get this 20,000, no one particular trade will stand out. We'll have to go in there deeper, right? We'll say, well, out of these 20,000, what is the largest one? Where trade that occurred, where it occurred, what are the circumstances? So to do that, we need to parse the tape further. So I'm going to slide down here, and these are the notable trades. So these here are the largest trades that we detected, right? So now we're parsing it further. Instead of, we go from the top level aggregated down to more detail. And when we talk about notable trades, these big trades, there are 2 ways kind of to detect them. One is easy. It's just a block trade, like 2,000 contracts traded in one single transaction, right? Like, let's say one single transaction, 2,000 contracts, which consisted of 20, this was for VWAP price of $24.50. But the trades themselves aren't always that clear, where you have exactly one trade, 2 sides that transact the block trade at the same price. Okay, so what I mean by that is that you can have a trade where you have buyer A, seller C both agreed to trade 2,000 contracts. You could also have a situation where buyer A buys 2,000 contracts, and you have seller A 1,000 contracts, seller B with seller B with 1,000 contracts, seller C with 1,000 contracts, and they match up. So what happened is you have this big trade for 2,000 contracts, but one of the sides consists of 2 different parties. On the trade tape, that will look like 2 different trades, okay, because you have 2 counterparties now involved. That could happen very frequently, especially like when you think about, when trades occur, and like, let's say you have somebody who needs to buy 10,000 contracts. Well, sometimes you'd have to negotiate that between different market makers, specialists, where, maybe one individual trader or party is not willing to do 10,000 of the contracts themselves. That's not, that goes beyond their particular risk parameters. But you can have maybe, a broker will call counterparties, and then you say, you know what, I could match it up, but I have 5 different parties on the sell side. Well, if that happens, it'll look like 5 different trades. So you could have a big trade with 1,000 contracts, but it'll look like 200, 200, 200, 200, 200. You could also have a large trade. Yeah.
Did you change? I may have missed it.
Oh, wait.
You may not have changed screens. It may not have changed.
Okay, sorry guys. Let me do that. So when you click on it, you're going to end up here on the options. Something like that. Can you see it now?
Yeah, perfect.
Okay, I'm going to close this screen so you see it. Okay, so this is where I was talking about the most active stocks. I mean, the most active options. November 25 through 20 calls, 20,671 contracts, a VWAP price of 361. These are aggregated trades throughout the day. So I'm going to slide down here. Okay. And now we get these other notable trades. Okay. So when we're talking about 2,000 contracts, this is the one I was referencing. That could have been done, two counterparties, buyer or seller. But that's not the only scenario where a transaction can occur, where there are multiple counterparties to the other side. Right. So you could have a buyer on one side, multiple sellers on the other side where they transact. Okay. So that would appear as multiple trades. So you'd have to detect it and then say, okay, this looks all like part of one transaction, where there's it on the tape, it'll appear, because the tape itself has to report each transaction. And so when you have more than one party, it has to report that, right? Okay, 200, 200, 200, right? That's how it gets reported. So that's how it is. So you would have to go in there and then figure out, okay, here's 4 trades, happened, basically within a short period of time. These are all one, that which is not typical there. These are all part of one trade. You'd have to aggregate that. There's another scenario where, let's say somebody is accessing liquidity, right? So you're accessing liquidity, and you enter in an order. Let's say I want to buy 1,000 contracts, but I don't see 1,000 contracts limit order anywhere, right? I don't see like where I could grab 1,000 contracts limit order. Like, let's say if I saw on a CBOE, oh, there's a limit order for 1,000 contracts, I could grab it. Sometimes what you can see is I need to do 1,000 contracts, but what I do see is there's 200 contracts offered on the CBOE, 50 on the Amex, 200 on the Philex. So you're going to see these limit order books, but they're all dispersed, right? They're across different exchanges. Well, I'm okay with that as long as I could grab, because my aim is just to grab 1,000 contracts. I don't, if I see that liquidity, I'll take it. Well, on the tape, it's going to show up as many different trades. You're going to have 200 on the Amex, CBOE, 30, this. So you're going to see multiple late trades. But if you look closer, you're going to say, wait a minute, all this you could aggregate. These were sweep orders. These were, somebody just took the liquidity out, right, on multiple exchanges simultaneously. Again, you'd have to go back, parse it, and aggregate those. So these are just some scenarios I'm showing you guys where you're like, even if you look at block trades would not reflect that. Block trades are only between, a buyer or seller, one counterparty on each side. But that's not always how, large liquidity is taken. So these are showing us the top, liquidity trades where we detected, these all added up to, looks like one side of a trade was grabbing liquidity. So we could see here in these Google options, we could see that our interpretation was there's a order, buyer came in, grabbed liquidity for this amount of contracts for VWAP price. So why would we want a VWAP price? Well, VWAP price is saying that it's potentially where, just like we described now, if you're grabbing liquidity off different exchanges, you may grab 1,000 contracts and you're not, you could do a sweep order and the contracts, even the liquidity, they're not all at the same price on each exchange. So you could have SIBO 100 contracts, let's say at 86 cents. You could have 100 contracts on Felix at 88 cents. So you have these, if you grab all of them, right, you might get different, different prices there. But the VWAP price will average it out. So even if you have, like, say, one contract on SIBO at 86 cents, and then immediately you go and grab everything else at 87 cents, you might get different, different prices that averaged out to this, right? So now that we parse it, this quickly just lets us come in there and say, like, okay, what were these big trades in Google that happened? And looking at the big trades themselves are also important, because now we get to kind of see, any bigger large volume liquidity trades, and which will also tend to, establish a new fair value price discovery as far as, like, an implied volatility, and what were our interpretation of what were they trying to do at that moment. So this is a quick way. If you go to this dashboard and you're looking for certain just notable trades in single legs, parse the way we just explained it. Now we could just see these were some of the big ones yesterday. We're not open today, so this is from yesterday's data. All right, well, I think I'm going to stop there and throw it back to you.
All right, great job, D. Thanks for bringing these webinars to the Chameleon community. You have a great day, my friend. We will see you tomorrow.
Thanks everyone for joining. Stay safe out there, and we hope to see you tomorrow.
Have a great day, D. Bye-bye. Hey, everyone. Have a great, safe trading day today. It is going to be a holiday weekend. I haven't spoken to Dimitri yet. We'll probably have a show. We'll definitely have a show tomorrow, and then try to have one on Friday. But anything can happen. Everyone have a great, safe trading day, and we will see you tomorrow.